Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Update for February 24th, 2013. Just a quick disclaimer to remember that any information contained in this presentation is for educational purposes only, and neither Lock in Your Success nor myself, John Locke, are licensed financial advisors or broker-dealers, and we are not making any specific trade recommendations. Also, the risk of loss in trading securities, options, and futures can be substantial, so please be aware of all those risks prior to placing any trades. Be sure to visit our trading blog and find out about the many programs of coaching and mentoring, as well as our video programs we have available. And be sure to join our mailing list. I am offering a free half-hour one-on-one strategy session for people who have not been mentoring with me to discover the many ways we can help you achieve your goals. And check out the Bearish Butterfly and M3 options programs, as well as the optionstribe.com. It's a great place as well. All right, let's talk about the markets. We have the volatility kicked up a little bit this week. We started off the week to the upside and had a little bit of volatility in the middle of the week with the down move, and now we're kicking back up again. And I'm going to keep my same posture as before. When volatility starts to pick up, that's typically bearish, and last time that didn't work out for us. It started to pick up a little bit and the market just kind of continued to grind up. This here is getting a little bit more serious, so watch for a market reversal, or at least a good possibility this may kick us into a sideways move for a little while. If we come into the NDX, we have continued sideways movement in the NDX. This is an excellent market neutral trading index for the last 3 months, and if you're doing market neutral stuff in this, you should be doing very well over the last 3 months. If we pop into the Dow, this too has been quite sideways for the last month or so, so the market neutral stuff in the Dow should be doing fairly well. And if we go all the way to the Russell, which has clearly been the most bullish of all the indices for the past 2 or 3 months, has finally kicked down and broke our very strong uptrend line, which, if you remember last week, we were expecting. This thing is really acting technically perfect. I've had this line drawn in here for several weeks now, and we came right up and tagged that line. We were expecting a break of this extremely strong uptrend line here, which we got, and it came right down to what I called the next support level, and we bounced it. So this is acting technically perfect right now, which has given me a little more confidence on where the market might be going. And if it continues to act technically, or it continues to behave, what we should see is this come up and tag the backside of this trend line somewhere up in here, and then to come on back down. Whether it breaks this trend line or not, who knows? I think that it probably will. I still am looking at the market to close somewhere around 900 to 890 for the month. We shall see if that happens. If it holds trend line, we're probably going to close up here at 930. I don't think you're going to get the big breakout here that we've been getting every time lately when the markets pull back. Not yet. I think it's going to have a deeper pullback before we see something like that. But we shall see. It has fooled us before. So that's what I'm expecting for the markets. If we scoot over to our trades, we can start with the M3. If we take a look at the T-log here, you'll see we only did one thing this week, and when we started to get that really hard down move, we were a little overhedged to the upside. And I don't normally do this. Normally, when the market comes back at me, usually rolling the butterflies back, I did something a little bit different. I reduced the power of the hedging, and the reason I did that is specifically because we were overhedged in the position. We entered the position late in the cycle. We are under extreme low volatility levels, and therefore, to protect against the continuing up move that the Russells had in the event that continued, we were a little bit overhedged to the upside. So rather than rolling the butterflies back, I chose to sell my 2 870 calls and roll them all the way up to 920. So if we take a look at our position before we did that, on Wednesday we had these 2 870 calls down here. We were long 10 890s, short 5 910s, short 5 920s. the position looks something like this. As the market really started to pull in here, I started taking on some downside risk. My butterflies are way back here at 890. And typically I don't like to roll back butterflies, unless I'm within like 10 points of the shorts. Well, because if you do that, you end up getting too far behind the market. And I wasn't expecting a market collapse. So rather than go ahead and roll these back and put myself in a really weird looking position because I'm overhedged, I decided to cut my hedging back. Again, I typically don't like to do that because that takes on too much upside risk. However, in this specific case, I will do that. And then I'm just kind of going to really watch the upside. So after I rolled those calls forward, if we look at end of day Friday, we see here those 2870 calls are gone. And I bought back 2 of the shorts at 920. That may have been a little bit more of an aggressive move than I had to make, but the market was coming down fairly hard at the time, so we weren't sure if support level was going to hold. I'm playing for the safe side, so we played this a little bit safe, and this is what the position looks like now. Of course, if we get a hard up move, I'm going to have to reverse somewhat out of that adjustment that I made, and raise up this line up here, because now I am a little bit vulnerable to a large upside move. However, like I said, I would only expect to move to 930 or so, and then for the market to back down into here. So I'm not going to play it so that has to happen for me to win, but I am going to lean the position a little bit that way. So that is the March M3. As far as the bearish butterfly goes for March, what I did this week is I sold my 10 900 butterflies, and then later in the week I bought back 5 of them. So I'll tell you, we'll go back and see why that happened. We'll go back to the 19th at 9:30, and when we're sitting here, I'm in 900 and 920 butterflies. I have an add point at 940, and I can't roll this. I do have what we call a delta theta ratio problem. Actually, no, I don't. I have a maximum delta problem, where my maximum delta in this position, this size, is minus 500. I'm well over my minus 500 maximum delta. And typically what I do here is I would take my 900 butterflies to 940 in that case. However, I'm only going to do that if the market is over 930 near the close, and that's not the case here because the market is skewed so hard. So what I'm going to do instead, to reduce some of my upside risk should the market continue to come up because the market's skewed so hard, what I'm going to do is I'm just going to remove these 900s. And I went ahead and did that. Cut our delta down to minus 295, which is still too high for this position size, but we're really not going to do anything about it. Basically what we're going to do is we're going to wait until the market is decisively above 930 and make that roll, which was what was my plan. Now we did close the market near 930, or when I checked it was very close to 930. I like to see it decisively over 930. I don't usually trust when the markets are skewed this heavy. But here, you see, we touched 930 for the day, but on Wednesday we came slightly over. However, I decided to hold the position. Well, I guess we didn't come over. Yeah, we came slightly over earlier in the day. And I decided to hold the position intraday because I tend to check things towards the end of the day. So nothing happened this day. And then on Thursday, we started pushing positive delta down here. And being very close to 21 days to expiration and the volatility being very low, we've been tending to go into our expiration guidelines a little early. And that's what I decided to do. So when the market started pulling down, I started adding in these 900s back in. So if you come to end of day Friday, you can see I added 5 of these 900s back in. Of course, we got a bit of a whipsaw in the market. Being in expiration guidelines, what's going to happen here is if this continues to go up, I'm watching my maximum delta, and I'm going to start building in my 940 butterfly as the price goes up. That's the plan. If the price comes back down and starts continuing down, we're going to start building this 900 butterfly back in here. And if nothing happens, we're just going to hold positions. So this trade actually looks really nice this month so far, and I'm really happy with what's going on. let's take a look at the March rock trade. One of the things that happened here, let's go back to Tuesday. Here's what the position looked like on Tuesday. It was looking really nice in the afternoon. And then we started getting the really hard down moves. This trade here, particular trade, does not allow a whole lot of positive delta. So when the market started to pull down, what we do is we roll back these 900s, and that's what we did on Thursday. If you take a look at this, we ended up taking those 900 butterflies back to 880. The volatility increase and so forth did hurt the position quite a bit, which should be expected. And this is what we call rock position with 1/2 rollback. It's kind of a temporary position, and we're just going to kind of see what the market does from here. If the market starts to pull back, we have adjustments to deal with that, and we'll go over them when it happens. If the market tends to stay here, when we start creating enough negative delta, we're going to start adding butterflies up here at 920 and start propping the middle of this up. If the market stays here, or if the market continues up, we're going to start bringing butterflies in here and propping this up. So this is a temporary position for now, and we'll see where the market goes. And like I said, lack of movement will eventually cause us to add in here. Movement to the downside will more or less convert this thing into an M3, and movement to the upside, we're going to just come back and start adding some of the position back in up here. If you take a look at the T-log, this rollback was done on the 21st, and that was the only move of the week, so no big deal there. And last but not least, we have 2 V Condors. I think I only showed one of these last week, but let's come back and we'll do the March V Condor, which is still doing quite well. It's up about 3,400. If you take a look at it, it looks like this. The only thing I did is I finally ended up rolling this call up because the market started coming back. And if you look earlier in the week, let's see what day this was done. Let's see the T-log here. If we run back to the, actually, yeah, we had a couple adjustments. So let's go all the way back to the 19th, which is Tuesday. Alright, the first thing that happened is we only allow 100 delta, minus 100 delta on this size position. So we're coming up here, and again, the market's been very, very bullish. Let's spread this out. And we only allow 100 delta. So in order to correct that and bring that down to something a little bit more reasonable, what we end up doing is we buy back some of the short strikes, and I did that by the end of the day. Well, we'll just go to the next day here. Let's go to the beginning of the day. Alright, so we come to the beginning of the day. It's Wednesday. I bought back right at the end of the day on Tuesday. I bought back 2 of these shorts to cut our delta down under minus 100. I think it was actually minus 80 when I had it. Yeah, now we're pushing maximum delta again, but we usually don't check these so much all day during the day. So this is what the position would look like here. We got a nice hole right here if the market backs off too hard, and we're still okay to the upside. If we creep up, this would end up in here, which is pretty much what we actually want to happen, and we take a big profit. However, we did not get that. By the end of the day, we got a very big down move. Since we got the big down move, what I ended up doing here is coming in. I sold these 2 puts back off again, and that basically just made the position look like this. And this was fine for going in overnight. That wasn't much of a problem. Of course, we got the continued down move on Thursday. So when we started to get this continued down move, what I don't want to happen is I don't want the position to fall back into this hole here and start losing money. So what I tend to do is I just take this long call here and I roll it forward. And that's exactly what I did. So I took the 880 call and rolled it up 20 points to 900, which if you go towards the end of the day, it's up here at 900 now. If you go towards the end of the day, it's just going to look like this. It gives me a bit of a bottom here in case the market wants to settle in here. Then I don't have to worry about going negative on the trade or losing all the profit. And of course, I'm still wanting the market to continue to grind up here, and it gave us that on Friday. and we had a bit of a volatility drop, so we ended up getting some of our money back. And here is what the position is currently looks like coming into the weekend. So that's where we stand with the March trade. It looks very good. If we come into the April trade, the April V trade is not doing so well. What happened here is we got a very large volatility increase when the market moved down. This Condor trade does well with decreasing volatility, does well with very large upgrinding moves, doesn't like the volatility increase. So here's this trade here. It is down $724. Not that that's a big deal, because it's not. It was down as much as, I think $1,500 during the week, which not a whole lot of money, but the volatility did beat us up a little bit when the market was down in this range here. So far everything is going fine. There's no issues, no need to do anything, but this is what the trade looks like. If I just widen out a little bit, you can see our shorts here at 860, and our shorts up here at 990, and you can see our little straddle we got going on here. So if the volatility lightens up this week, this will look really nice. If the market creeps down, this will be fine. If we creep down into here, we'll end up making a decent amount of money. If we creep back up, we make a decent amount of money. If it sits here, you'll still make something, but not very much. If you get the very, very hard down move, market crash type of thing, then you typically will lose this type of a position. But so far, so good. So no complaints at all. And I believe, oh, no, that's not everything. I also did enter the bearish butterfly for April, and I did not get to post that on VTF, but we can come back and take a look at that. This was basically entered right at the end of the day. I actually entered this at 900 short strikes. Even though 20 points under is really closer to 890, I had a severe delta theta ratio problem. You can see even here I technically have a delta theta ratio problem, but I'm not going to go right on top of the market with my entry. I'm just going to go 10 points behind in this case. I'm pretty much borderline. And what I do is I'll wait to see what happens next week. If we get a continued up move next week, we'll roll this forward. If we pop up over 920 or so and kind of hold it, then we'll pop this and roll it. But for right now, this is perfectly fine. And here's what our analyzed graph looks like. You can see how heavily the market's skewed right now. It's kind of crazy. So it looks like the market is pricing for a further up move. And like I said, when we talk about the technicals, I was thinking we may get a bit of a further up move, and then it's going to reverse, but we shall see what happens. So I believe that is all our trades. We've got a lot of trades on right now. And I'll keep you up to date as well as I can through the week. And until then, I will see you next week. Have a great trading week, everybody. I'll keep you up to date with any changes. Thank you, and good night.